you just got to have patience. You got to have a strategy. You got to surround yourself with people who are willing to argue and challenge your way of view, so that with that fear and trembling, we find the right path.
Hello, everyone, and welcome to another edition of Financial University. I am Chris Martinson of Peak Financial Investing, also of Peak Prosperity, here today again with Paul Kiker of Kiker Wealth Management. Paul, good to be back with you.
Good to see you, Chris. Good to see you again.
Yeah, I was I was out of country last week, down in Panama, taking a quick peek at the canal, but also the migration thing up close and personal. Between us, super frustrating trip because I was this far away from some of the world's best fishing,
and you didn't get a chance to go.
I could no, both on the ocean side, but we were up in this thing called Lake Gatong, which is this dammed lake, which is forms a big portion of the Panama Canal, and they'd killed all these trees. So we literally for an hour drove past tree stumps with lily pads. It was bass fishing. I've never seen so much bass territory in my life. And there wasn't one other person out there fishing. No. So I was like, oh, it's like a naive fishing environment. You know what I'm saying? Yeah.
And that's peacock bass territory, isn't it?
Yeah. Yeah, they got some crazy things in there.
I've heard they are legendary to catch. I've never caught a peacock bass before.
Me neither. So I was thinking of you. I was like, oh, we're coming back,
I would love it.
Absolutely. So markets keep going up and up and up and up. I think we're continuing the pattern I saw start on October 30th of 2023. Something happened. A lot of money came into the market. It's still there, and it's a little interesting. I may have this wrong, but I thought I heard that the Nikkei is dangerously close to poking its head back above its famous 1989, never to be repeated cycle high. Japan, S&P, small cap. I mean, there's a lot of money floating in there right now. So that's how it looks to me. What are you seeing?
I'm seeing the same thing. I mean, valuations are high historically outside of what we saw in 2020, 2021. John Hussman did a really good job in highlighting that in his most recent market comment. I think it's buy low, sell high. I'll reference that in a minute. But outside the 7 weeks of 1929, valuations have not been this high based on his measures. Mm-hmm. But the reality is, I mean, investors were, this is the longest anticipated recession that hasn't officially occurred. You had the Fed saying they were going to stay higher for longer. Everybody was seriously concerned about that. And then all of a sudden, out of the blue, at the end of October, 1st of November, the Fed, dramatically surprises the markets by saying, hey, we're going to be cutting in the next year. So, we have gone from an 80% odds of a cut based on market participants anticipating to, I think, 2% now for March. So it's highly unlikely they're going to cut next month. But it doesn't matter because financial conditions are loosening, and that's been enough momentum to just drive these markets higher. And look, this is a tough time right now. We could build the argument that we're going to reach out to new highs in the market, and this is a bear trap, and the market's going to turn the other way. And there's a lot of concerns in the future, but this momentum is tremendous, and they basically pushed investors into the corner where they're punishing anybody who's trying to be prudent about this and forcing you to jump on the boat.
Yeah, I'm always suspicious when I see stocks and bonds both move higher at the same time. That's not Jell-O moving from one place to the other, risk on, risk off. That's just, where's all this new money going to go? And then they're never honest with us about it. They will tell us about it. I just found out yesterday, I talked about this, that the Federal Reserve had set up arbitrage for the banks to make even more free money, right? Where the banks could basically tap their so-called emergency bank term funding program, the BTFD, right? It's emergency, it's a discount window, punishing interest rates. Only the rate of interest that they're charged on that money is less than the rate of interest they would receive from putting it back with the Fed in a different pocket. So they were borrowing money from the Fed at, say, 5 and lending it back to the Fed at 5.5. If my bank would offer that, Paul, all day long, I'd be like, how much can I get?
Absolutely. We go borrow in some yen and place it over here too, so we could even further increase that arbitrage.
Oh my God, it's gross. I mean, it's really gross, right? It's totally unfair. Remember, from the Capuchin monkey story, the twin pillars of society are fairness and reciprocity. This is deeply unfair.
Yes.
It's saying to some of the biggest, most wealthy, most profitable businesses anywhere who perform, can I be generous? Not a lot of actual work for society, right? Hey, we're just going to print money out of thin air and hand it to you totally risk-free. And then you have to read about how people are now driving without insurance. And I think people need to consider, maybe I'm reconsidering my auto insurance to up my uninsured motorist piece, because it turns out there's a lot of uninsured motorists now because they can't afford it, right?
Yes, that's right. And they're taking the risk. So I'll tell you what's interesting about that is so we have there's a rumor running around in some of the circles out there that the government's essentially, well, one, they incentivize, so nobody's going to pass up that arbitrage opportunity if they have knowledge of it, correct? So that incentivizes the banks that don't need it to take advantage of the program. Furthermore, there's rumor that there's pressure on the banks to access these facilities whether they need it or not. And you know why? This is the rumor, so that the short sellers can't sniff out the banks that are in trouble and push some momentum to the negative side in the banking industry. So I got to do a little more research on that to verify that that's correct, but it came from relatively credible sources. So, they're doing everything that they can to, loosen financial conditions, which I've got a chart that we can show here in a minute, and obfuscate what's really going on under the surface to try to keep this party going. And hey, I can't argue that this momentum will not carry to new market highs, because we've got a lot more liquidity than what we had in 1929. So it makes sense that we should go to higher valuations. Now, the question is can the most nimble investor get out of the way before the inevitable collapse occurs? Or is this like party like 1999? They kick the can down the road another year and a half, and that momentum wanes before we meet some trouble. But it's clear they're terrified of deflation.
Well, we showed this chart a while ago that off of the Federal Reserve's own website, that the top 10% of households in the United States now have 92.5% of all the equities out there. They like to say, oh, more than half of households have equities, as if it's some democratic thing. But it's not really a democratic thing if there's really only one party.
Right.
And that's the party of the 10%, right? And I know people listening to this, some of them will fall into that. I'm not saying there's anything. I'm not denigrating that, but this is the system they have, and because of that concentration, the Federal Reserve is under extraordinary pressure to keep those stocks elevated. And since 2008, they've said they don't have two mandates, stable pricing, full employment. Their mandate is keep the markets high, right?
I think
because
position.
Right? The parent cares about their child because they dive into the gravel to prevent them from experiencing a scraped knee, right? The Fed they dive into the gravel for these markets every time they wobble,
They sure do.
And I don't know, maybe it's just because they don't want to go to a party and have the other 10% people at the party yell at them, or it's because they know something we don't, which is like, well, if this did get going to the downside, this would be more of a uncontained salt cavern collapse with a suck in the lake down moment, right? It'd be very bad. I don't know what their motivations are, but let's be clear. I have every expectation that they're going to bail the markets out as often as necessary to keep this thing going.
Correct. I have the same expectation as well. The question is, do they let it get out of control in the short run and lose a little bit of control and you have a 20-30% market decline? But the risk is, what if they can't stop it? In 2008, they started cutting interest rates relatively dramatically, and it got out of control. So I think it seems that they're putting so much effort into trying to keep things from starting to slide out of control that further increases investors to just not pay attention to details. Earnings don't necessarily matter anymore. Valuations from a historical standpoint don't matter anymore. Even though nobody has stated it, the majority of the market participants are they have to be believing because of the way they're chasing this market, that this is a new era, similar to what they stated back in, I can't remember who it was that stated it in 1929. This is a new era, and we're at an elevated plateau. That is the expectation of investors right now.
That was the hapless Irving Fisher. We have reached a permanently high plateau.
That's correct. And he rang the bell.
Whoops.
So,
Always embarrassing professionally. Yeah. So, well, I mean, against that though, there's a lot of cross currents. It's just very bizarre. And again, from myself, the frustrating part, Paul, is that I like to analyze things and I like things to make sense. And I think fundamentals always matter in the long run. The problem is in the short run, none of that matters at this stage. Right. So now you could do worse. Like if you said, I have one trading philosophy, which is show me the overall liquidity conditions. And when they're going up, I'm long. All sorts of risk things. And when they're going down, I switch. Right.
That's right.
It's been pretty good strategy for a while.
It has. And I can show one chart just talking about financial conditions.
Please do.
Fed. So let's pull this up here. I don't have the ability to utilize the mouse right here, but essentially this is the Chicago Fed National Financial Conditions Index. So as this is going down into 2024 on the right-hand side of the chart, that means that financial conditions are loosening. So credit's easier, money's easier to get a hold of. So just in your mind's eye, go back to 2021, 2022, market reaches a peak, financial conditions where that red arrow is highlighted, we're back to that level. But as they tightened, the market started to correct, and we were on the verge of that bear market, and then all of a sudden here we are. They started easing after Silicon Valley Bank failed in March. That was the peak there. I wish I could show the mouse, but basically right there at the third peak at the start of 2023, and then they've been loosening, but they've been accelerating there towards the end of 2023 into 2024, and that was when the Fed changed their tune. So what we can see there is that's obviously, the market was a rocket ship from November higher as those continued to loosen. So,
yeah,
then you've got, and my concern about that is everybody thinks inflation is dead. And yes, we have disinflation occurring right now. But, if you look at container shipping rates that are taking place in the Red Sea right now, I read a report that there's a $100,000 charge increase. So those are starting to increase again. So how are they going to balance, walk on this balance beam between trying to keep the markets high with all this loose liquidity, but not have inflation come roaring back? I mean, they're spinning so many plates that at some point something's going to break. But right now, investor psychology is party like it's 1999, and everybody's expecting the market to be substantially higher, kind of opposite of what we saw in 2023. Everybody was expecting a recession. Now nobody's expecting a recession. The question is can this fiscal responsibility that we have, what's the data here? Yesterday the U.S. debt hit $34.1 trillion, and that's a $2.7 trillion increase in 12 months, much more than what they stated it was going to be. But what, I got to give Sven Hendrick, Northman Trader, credit for this. But what I really want to know, and I would feel a lot better, is let's see what the markets and economy do in a balanced budget. Then we'll really know.
Yeah. Yeah, well, 2.7 trillion deficit is, give or take, roughly 10% of GDP. So for everybody listening, if we remove that, if that went back to zero, no deficit spending, roughly 10% of GDP would get shaved off the top, but there would also be an overshoot effect because that money is printed and spent out into existence, and it has a multiplying effect. So 12, 13, 14, maybe 15%, who knows? That would be equivalent to a Great Depression, which, by the way, is happening for heavy industry, energy-intensive industries in Germany. They're already in a full-blown recession, depression. Like, it's very, very bad. And then the German farmers are, having a bad time. And what's interesting is they just had huge protests or gatherings of people erupt. and it was people protesting the protesters. It's getting very weird. over there, because they've been branded as racists, the AFD party, like these are all ultra, like because the farmers are saying, hey, you're killing our livelihoods, like, oh, well, the newscaster told me that's racist, so I guess I have to protest that, And
Right.
it's getting, we're not making a lot of sense anymore out there in the narrative space, and I'm worried that what we're seeing there is similar to what we're seeing in the financial side, which is it's these distortive funhouse things. Like the Fed should, I actually think that the Fed ought to be disbanded completely. We don't need it, period. But we have these people, they're interventionists, and they're monkeying in all sorts of different crevices at all times. Like, we're going to funnel these banks more free money, and we're going to give them an arbitrage opportunity, and then we're going to buy these things, and we're going to try and do... It's like, you know what? I want to know, Paul, I would like to know that the bank I'm banking with sucks because they have to offer a really high rate of interest. Mm-hmm. And that's how they attract capital and deposits. Mm-hmm. And but otherwise there's no difference between the banks. They're all equivalent, right? Right. And I don't know who's actually doing good for the community and who's being like Flighty McFlight, doing crazy stuff, or who's got like a stupid derivative portfolio they can't even explain to themselves, right? None of that's we don't have any information where it's an information-free environment. It's very hard. It's very tricky. That's what the Fed's done. They've broken the signal mechanism. So that's why I would disband them. That's a cardinal sin. Oh, we believe in free market capitalism. No, you don't.
Mm-hmm. No.
Yeah.
But
anyway.
They claim it's capitalism, and this is not capitalism. Because capitalism allows the failure of weak institutions in recessions. You're supposed to be rewarded for good behavior, and you're supposed to be punished for bad behavior. That's capitalism. But when you're putting these programs together, and if the rumor is true, I don't know if it is or not, but it doesn't surprise me because everything seems to be propaganda and narrative, right? Narrative is not truth. I mean, it can be truth, but narrative is not truth. That's propaganda. When you think of propaganda, that's not truth, right? Mm-hmm. I want to tell you what you need to think. Well, when you think about short sellers, they play a role in the market because they're like the sharks. They're like the lions. They're going to take out the weak companies. They're going to do the research. They're going to go in there. Research for short selling is hard. Takes a lot of detail going through all kinds of company filings. They have a role in the market to take these weak companies out. But if it is true that the government's incentivizing through certain programs with arbitrage at the taxpayer expense when we're running these ridiculous deficits, and they're encouraging or through regulation threatening, if that happens to be the truth, that you have to access these facilities so the short sellers can't sniff out the weak banks, there's nothing truthful about that at all. It's narrative for a benefit of what? Political narrative? That's not what, that's not what they're supposed to be doing. But unfortunately, it appears that that's what's taking place.
So what's catching your eye right now? Your financial conditions are still easing. So guess what? Risk assets are going up. But there's been a lot of things like it's been bizarre to me to see some of the stresses and strains that we are seeing out there. It's very clear to me that the people on the low end of the socioeconomic spectrum, let's say from the half mark down, having a real hard time with it now. With rents skyrocketing, housing affordability, if you were going to purchase really at unaffordable levels at this point, insurance costs going up, which we just discussed. They like to tell me that my inflation's going down, but what they mean is the rate of inflation. Things are still more expensive than they were 2-3 years ago by about 25% in a lot of categories. It's just that they're not going to go up quite as fast next year, but they're still going up, right? It's at an unsustainable level, and they're all cheering the fact that it's going to be even slightly more unsustainable, but at a lower, higher level, I guess.
I know. So one of the things that we're seeing is the momentum behind the market has been ridiculously strong. The problem is that the underlying market conditions are still weak because we're back to the Magnificent Seven really carrying the weight of the market. You haven't seen a dramatic move in small caps and the large majority of the companies that are out there. But in looking, and this is the concern that I have, if they kick this can down the road another year, okay, let's say they kick it down the road another year and a half. What's going to happen for investors who don't have a strategy? You've got to be really confident in your plan, because what we run the risk of, market can stay irrational far longer than most people can stay patient and on the sidelines. So especially if you've woken up to the fact that, hey, this is a crazy world that's been taking place since 2017, you've been sitting on the sidelines, at what point does this psychological momentum tempt you into jumping into the game without having the ability to exit, right? So what I'm afraid is it's going to have this big sucking sound where it's going to pull all these individuals off the sidelines because they feel like there's nothing else to do, and then everybody's in the market, and the person that doesn't have a strategy on when to increase risk and when to reduce risk is going to be like a deer in the headlights. When the market drops the first 10 or 15%, they're going to be panicked. Well, okay, we've been buying the dip for the past 7 or 8 years. I got to stay the course. And then they're down 50% by the time, they endure enough pain where they can't stay that course. So it's important for people to have a strategy to be able to navigate this environment. And we have to be open-minded. I don't like playing the game by the rules that they force upon us. But, we can't rule out that they don't just absolutely risk hyperinflation, which is a completely different investment strategy based on deflation, with the boundaries that they're walking over and the risks that they're running with this, with cutting rates if they actually do it, with the economy supposedly holding up well. So this is a really tough environment. It's hard on people. The haves that have listened to you, have done a good job of being educated by you. They're looking at the world through truth. They're struggling. The have-nots are just being decimated by the inflationary pressures that are, disinflation, but like you said, the prices are higher. There's a lot of misery out there right now. There's just a lot of misery out there in all parts of society.
Well, I like a lot of everything you've said there, including the idea that, and this is the part I decry, which is they force you to play the game, right? And then they change the rules along the way all the time, right? Yeah. It's not even like there's a game and you learn it like Monopoly, read the back of the cover, and you sort of understand, okay, those are the rules, right? No, they change all the time. And so that's the hard part. And I wish there was a parallel game, which is, hey, play that game if you want. It's highly speculative, lots of risk. It's a full contact sport. Go for it. Or keep your money over here in this parallel money system. Like, you remember, like there was 220 years of our country's history where if you earned $1, which was a Spanish milled piece of silver, and it had an equivalent offsetting number of Spanish dollars, it would make an ounce of gold, right? So there was a relationship. 220 years, Paul, where you could have earned $10,000 equivalent, put it in a coffee can, and 100 years later, it was still the same amount of money in purchasing power. Like, yes. That is a completely different environment, right? Mm-hmm. Where now that if you did that same thing, because the Fed's told you, if you take $10,000 and you bury it at their stated rate of 2%, I have to do some quick math, you'd probably have $1,000 left.
Right.
In 100 years, right? Mm-hmm. If you were lucky. Yeah, about 70, a 90% loss.
2.5, approximately 30 years, you'd have a 50% loss. And
right.
Yeah. So there's no reward for prudent behavior and discipline and sacrifice today to make yourself and your family better off. You have to take that and put it to work. And especially, for the long period of time that they had treasuries below the real rate of inflation, Tina, there is no alternative, really took hold. And so it's frustrating, but we have to navigate it and understand that they're going to change the rules and just realize we're not going to navigate this perfectly. Nobody's going to do it. In hindsight, there's going to be somebody that happened to make, have one tool that works perfect then that didn't work for the past 10 years, and we'll celebrate that one person that happened to get it perfectly. But for the wise, prudent investor, you've got to roll up your sleeves and you have to fight tooth and nail and take each step in an investment decision with fear and trembling. I mean, you really do. You have to have the courage to take that step, And you have to understand that you're not going to make every decision right, but you have to have the parameters around that, okay, if I'm wrong, let's limit the damage that it's going to do to me, and we'll have these other investments that are going to outperform.
Paul, what kind of I know you've been talking to a lot of people lately who are exploring your services. What are they? What generally? Nothing specific that would identify anybody, of course, obviously. But I mean, what are the main concerns that people are presenting with?
That's a really good question, Chris. To focus on the main concerns, I have a couple. The one that comes to mind first is there's a common theme, I would say, with 25% of the individuals that we're talking to is like, look, I haven't been able to find anybody that I trust that does this because my eyes are open to the reality of what's going on. And when I go to the average person in the industry on my side out there, you know, it's hey, modern portfolio theory, buy and hold, buy an index, leave it in there, right? That's worked for a period of time. They pull out these historical charts and show you, and they can't have a conversation about the risks that are out there because they have no sell strategy, no risk management strategy, right? They have a faith system that this is all going to work out. So those individuals have been forced to do this themselves, and they're trying to balance their careers with do it themselves because they don't have any alternative. They've not been able to find anybody they can trust or talk their language or demonstrate to them how they can navigate this environment. That's about 25%. Another 25% is close to retirement. They don't have a choice, right? They want to retire. They're at this point and they're like, okay, how in the world do we navigate this going forward? And how do I put plans in place to make sure that we're going to be okay? And I would say that's probably the 75%. They're 10 to 15 years away or they're in retirement and they understand the risks that are out there and they need somebody that can help talk them through, answer their questions, and navigate the environment.
And the other half?
And the other half? That's a good question. I'm trying to come up. It's all kinds of different.
It's all kinds of stuff. Yeah.
So
well, I mean, there's so many
things
to worry about, right? I mean, what are the BRICS up to? What's going on with the dollar? Hey, what happens with the petrodollar? You know, I just gotten this. I can't really call it a debate, but you know, I put some stuff up and Doomberg put some stuff up, and we went back and forth on energy, and it's amazing to me just how vastly differently people can look at the energy space, for instance, right? And I'm staring at it, and you know, the United States is about to put in another 7.5 billion cubic feet per day of LNG export trains, if they approve them. And so we're just ripping it out of the ground and exporting it as fast as possible, right? And I can just look at this and I can tell you that just hastens the day when all of a sudden we don't have that stuff anymore, and it's really expensive, and now we're buying it from somebody else in the world. And what is a net positive, because we're exporting and receiving funds, will reverse. It'll just reverse. The tide comes in, tide goes out, right? And in that tide goes out, nobody's thinking about that. They're just like, oh yeah, woo, we got it. Let's get it out of the ground. I'm like, what about them? What about my grandkids as yet unborn? You know, what about them? What about the people after them?
That's right.
What about the people after? There's no sense of future. It's just this really, you know, this is good for us, so we'll do this as fast as we can right now. And it's hard to feel good about that strategy for me.
It is. And Chris, I really enjoyed the debate back and forth. You did an unbelievably good job of saying, here's the data. This is where it is.
Thanks. Yeah.
And we've got to pay attention to what's worst case scenario. I think there's an overly optimistic, just from what I know about what was going back and forth. I may have missed some there towards the end, but he was very respectful and complimentary of you. You had the discussion, but it seems like there's a lot of hope in there. And my concern about that, I agree with you. We have to consider worst case scenario. That's what I tell investors when we run a retirement plan. You have to consider worst case scenario, because you can't enter, you know, there's no way that you can go into retirement if you don't understand what worst case scenario looks like, and you have to build a plan that you can accept worst case scenario, because we have we can't control the future, an unknown future. So where you are is, your stance, I believe, is important and prudent. Yeah, I understand that technological advances can make a big difference, but they can kick that can down the road a little bit, but not stop the inevitable from your point of view, where if we don't solve this issue here, then there's going to be a wall coming in the future and everything changes. everything. So I thought that was a great debate, and I enjoyed listening back and forth, and it makes us all better.
Absolutely. I do insist on data.
That matters.
Well, it matters. I mean, and who knows? Maybe the data's wrong, and then we change. As we get better data. But that's the thing that's really lacking right now in a lot of quarters is a respectful debate that's founded on something other than a belief system. So hope is a belief system, right? It's like, look, humans have always managed to surprise ourselves technologically. That's a trend. It's going to continue. That's my data, right?
That's right.
But then you sort of peel back at that and you go, well, actually it helped us get the stuff out of the ground faster, but it didn't make more of it, right? It didn't improve. We just got it out faster. And that technically it's brilliant, but did it change the dynamic? And if so, how? Well, it just made us get it out of the ground faster. That's okay if we're using that to build out a comprehensive program for when it's gone, right? So if we were ripping that, LNG or natural gas out of the ground and pushing that into an industrial process that then gave us thorium or small modular nuclear reactors on the back end, I would go, okay, this could work, right?
Yes.
But when we blow up the Nord Stream pipelines and then force Germany to buy our LNG, I'm not sure how that's helping us really on that front. It's just like, I don't know. Well, this is a great awakening. I feel the quickening. A lot of people are talking about it. Creates a little bit of that nervousness because there's anxiety even because it's changing so rapidly. Mm-hmm. But we're seeing people waking up now to all of this, right? Which is kind of like, we have like our immigration policy isn't an immigration policy. It's a migration policy. Yes. Migration is not immigration. Immigration, if you've ever seen somebody who's had to go through the green card process, it is a flow chart, Paul, with probably 80 boxes on it, and twice as many forms. And like it's a 7-10 year process. I mean, it's a thing. Mm-hmm. That's not what we're talking about. That's immigration. Migration is what happens when birds leave Peru and, head up to the Arctic. It's a mass movement, from A to B.
Yes.
And that's what we're seeing, right? And it's just and that's what certain people in this country are promoting. And it's very clearly, obviously not advantageous for the receiving country.
No. And I do not understand the other side of the argument. The argument is well, we've got an aging, if I give them the greatest benefit of the doubt in their argument, okay, the only thing that may make sense is we've got an aging population, so we're going to have a labor force issue at some point in the future as the baby boomers retire and exit the workforce. Okay, I do understand that. We'll soften up the legitimate process to where you're still getting those people that you want in the country. There's some filtering process so that we can maintain our culture and our excellence. I don't understand, this battle between, I understand Texas's stance, but I don't understand the administrative stance that, hey, open the borders, pull everything back, just let everybody come across, and I don't understand that at all. The only thing that does make sense to me is some type of political reasoning, at best. Yeah.
Well, I think RFK just tweeted this out. He said, if you take a silver quarter, 1964, you take where we were then in terms of minimum wage, and you just cast it forward, that it would be about the same in silver, but which was $1.25, 5 silver dollars. It'd be basically $25, right? Roughly speaking, per hour. But that's if you believe the CPI. If you believe, like I do, that that's at least understated by half, that would mean that we would have $50 an hour as sort of like a base minimum wage. And I honestly think somebody, like when I first started working way back in the day, I actually survived on minimum wage. I had a house that I rented. Like I was, I was not living large, but I was living, and you can't do that today, right? Barbara, Ironicus, talked about like you would need 2 or 3 minimum wage jobs to just have a house that you share or rental room with somebody else or whatever. So you can't do that. And so when people say, oh, but we need to be all these people come in, do these jobs Americans don't want to do, they make it sound like it's a labor or a willpower problem. The fact of the matter is there's no incentive to work at a job where you bust your butt and you can't make it on that job. It's a disincentive. In fact, so I say we don't have a labor shortfall. We have a wage shortfall. You pay people the right amount of money so that they can actually live and do the job. They'll show up every time, right? That's what we're not talking about. It's like, wait a minute, how do we solve anything by bringing in even more desperate people to plug into the bottom of a system that fundamentally we've already identified doesn't work for our own people? That is a destructive ideology. These people are nuts.
Absolutely. And look at it from this standpoint, even on our local level, there's advertisements for bus drivers for the school system all over the place. And I've been having discussions, I say arguments, debates with the school board. I'm like, look, if you want bus drivers, you're going to have to pay them more. I mean, literally, they can't sustain themselves on, just getting the state health insurance program is not enough anymore. There was a period of time where people would do that, and that made sense, but they can't live on the wages that you're wanting to pay them. And we want to have the most excellent individuals that are driving our children home every day and driving those buses. You don't want to just settle for anybody. So you've got these individuals coming in, they're not going to immediately jump on the bus, and I don't want them, to come across the border and go straight on the bus when we know really nothing about that individual, whether we can trust our kids with them. Furthermore, you've got the teachers, that they're having a hard time finding teachers now because of the same reason. Like you can't find substitute teachers. They're having a hard time finding parapros. They're just not paying them enough. Now, you mentioned the silver where Kennedy talked about, and you probably know this, but I don't know, just for the benefit of the individuals out there, pre-1965 silver coins were 90% silver, right? So $1,000 face value of coins, you know how much the market price is right now?
23?
17. It was up to 19 here recently. I was surprised it was 17, but I would look about $17,700 is what you would have to pay in today's fiat currency to buy $1,000 of face value of pre-1965 90% silver.
Only a 17 multiplier? I have to go. That multiplier got as high, that multiplier got close to 30 at one point a little while ago. Yes, so the fact that it's down to 17, I'm pretty excited by that. I actually am. Yes. That's good news.
And we want to buy low, right? So
I do. I love buying low.
So that
time to buy more.
Put it in perspective. I mean, if you'd have taken $1,000 of coins and somebody had stuck it in the basement, today it'll purchase $17,000 worth of goods. That's far better than what $1,000 of cash from 1972 would do till today, correct?
Mm-hmm. Yep.
So, but yeah, I mean, wages are going to have to go up. Something has to change, and that's inflationary. Yeah. And when you've got a market that's priced to perfection and corporate profits that are at all-time highs, something's got to break, right? So wages are going to have to go up for people to live, or we're going to have deflation for the cost of good comes down. I don't know when that breaks, but something has to break. And if it is the salaries that go up, similar to what happened in the 1970s when inflation became entrenched, corporate profits are going to have to come down to absorb that, and market valuations are going to have to be reset. So it's not outside the realm of possibility that at some point when things start to break that we have a 40 to 60% market decline. We cannot rule that out.
Can't rule it out. Of course, we all have that belief system that they'll do everything they can to not have that happen. But, it's clearly it has to happen someday. I mean, we know this, right? The government just ran a $2.7 trillion deficit for this past year. You just keep accumulating those. Eventually, it does not work out. You just have a math problem. And so that math problem is coming at us. And so how people plan for that, get ready for that, really important. Some of the most vital threads I've had at Peak Prosperity have been discussing, hey, maybe it's time for us to really have stronger conversations about who we are to each other and how we band together and all of that. Because, people have wanted to have community, but they haven't needed it. There's a big difference between want and need, right? Yes. Like we're all on a cruise ship and everything's awesome and the ship's floating. Maybe I want to talk to you and want to go have dinner with you. But if it sinks and we're in a little boat and we got to figure out how to survive, now we need each other in a very different way,
Yes.
And so, point is, I think it's time for people to come together and begin having those conversations before the need arises, right?
Mm-hmm.
And more people are feeling that. Like it's getting we're getting down to some. I mean, the farmers are facing an existential threat to their way of life all over Europe, right? Nobody can explain why, right? Parents are facing the existential loss of connection with their children because the schools are becoming hyperactive and saying, we're now in charge of hiding things from you from a policy standpoint that are very germane to your child's mental health and well-being and overall physical well-being. Like, it's bizarre. Like, how did we get here? So it's good to see people finally starting to push back. So we mentioned Texas a couple times where the governor, Abbott, finally said, and by the way, if people haven't read it, maybe we'll put it up here so people can see it. But it's this letter to Biden basically invoking the Constitution, 2 separate articles, invoking that they're being invaded and their right to self-defense because the government's abdicated or, dare I say further, has treasonously neglected its duties to follow the law. I almost felt like I was reading something like an angry letter to King George, in 1773 or something,
I just about spit my coffee out when I was reading that. I was like, and I said, "Oh my goodness!" And my wife's like, "What is it?" And of course, I explained it to her. I was like, "This is a pretty big deal. I mean, that it legitimately is. I mean, somebody's drawn a line in the sand and said, we're willing to fight over this."
Yeah. No, it's good, and it's way past time. But as these things happen, I could see these from a market standpoint creating more uncertainty and volatility and all those things that the Fed very much would like not to have happen. They'll come back. We always go through these. The pendulum swings left, it swings right.
Well, and the good thing about where we are right now, the U.S. markets are, as far as equity markets, are really the only asset class that's above the January 1st, 2008 values. Commodities are still below where they were January 1st, 2008, emerging markets and developed markets. So you take utilities, for example, in their ratio to technology are as negative as they have been, the lowest that we've seen since right at the tech bubble. Now, does that mean this is ringing the top? We're not going to know until hindsight. But for the investor who has a plan, is looking, now I'm not saying you go out and buy utilities right now, but that's certainly on our radar because at some point that momentum is going to change. So there is a lot of opportunities out there for an investor who's willing to roll up their sleeves, go to work, or work with somebody who's willing to roll up their sleeves and go to work. There are life-changing opportunities. They're going to arise when this rebalancing occurs. So, Chris, we would all agree Warren Buffett's one of a legendary investor, and these numbers are not specific, but they're close because it just came to mind and I wanted to share it. So in 1999, Warren Buffett was down approximately 20% when the S&P 500 was up approximately 20%. Now, I clearly remember the very flamboyant individual on CNBC, because I'm not sure if I can announce his name or not, but everybody knows who he is. He's been there for a long time, that was calling for, the resignation of Warren Buffett. He doesn't know anymore. But what he was doing is, in that bubble, he was buying everything that people were selling, and there were more sellers than buyers, so the prices were going down. Well, when the technology bubble burst over the next 3 years, market's down close to 47%. He was up close to 40% over that period of time. Looked like a fool because he was focused on fundamentals, real, historical proven investments. And, so there's a fine balance in there in doing that. But the reality is there's life-changing opportunities that are there as these things start to break. And you've got to be in a position and have a plan to where you can take advantage of it. So, it's not all bad for those people who have their eyes open, who are educated, and the courage to see the truth. You just got to have patience. You got to have a strategy. You got to surround yourself with people who are willing to argue and challenge your way of view, so that with that fear and trembling, we find the right path.
Excellent. Well said. And Paul, we're going to have to call it there for the moment. So we've been talking with Paul Kiker of Kiker Wealth Management. If you want to have a full call and maybe get a full financial plan, which is a service that Paul offers for free for people who are qualified, come to peakfinancialinvesting.com, fill out a very quick form. Someone will get in touch with you, And Paul, again, just stellar feedback. People are so relieved to, maybe I'm just hearing from that 25% who they just want to talk to somebody who sees the world the way they do, and they deserve to, who really can parse things and think about it and have an open mind about where this is all going. So thank you for offering that service.
Thank you, Chris. It's our honor. I thoroughly enjoy meeting everyone that we've met, and it's worth their time. I've not had, we've had a couple people that it's not appropriate, the timing's not right for us, but they've clearly stated that we have helped them make better decisions through the process we took them through. So it's not a waste of your time. Give us a call.
Great. All right. Until next time, be well. Great talking with you again. See you next time.
Chris. Thank you.
Hello, Chris Martinson. I'm the CEO of Peak Prosperity and also Peak Financial Investing. And after watching that, you're probably wondering, well, what do I do with my money? Look, you both deserve and need somebody who can talk to you about what's really going on in this world, understand the situation as it is, not be steering you towards certain things that don't make sense for you or just keep you in a game that's already ended. Look, if you want to talk to somebody about the petrodollar declining or what is happening with gold or which sectors are actually the best ones to be in, given what the Federal Reserve is up to or the federal government, you deserve to talk to somebody who can answer those and has a few gray hairs and has been there through some of the economic cycles because, hey, we're in another economic cycle, so it's good to have that experience. Fortunately, at Peak Financial Investing, what we do is we go out and we scour and we look for the very best firms out there who satisfy one thing above all else. They've got great experience coupled to great customer service. So if you want to come by peakfinancialinvesting.com, there's a very simple form you can fill out, just a few fields. You hit send. What happens is an email gets triggered out. It goes to an endorsed firm of ours. You will get an email back. You can then set up a phone call for a 30 to 45-minute free, no obligation, no pressure call to find out if this firm is a good fit for you and to find out if you're a good fit for the firm. It has to go both ways. And if all that matches up, this will be one of the best things that could happen to you this year. So please come by peakfinancialinvesting.com. Very simple process. We would love to help you if we can. Thanks very much.